going on, everyone, and happy new all-time highs. A lot of people made a lot of money last week, so hopefully you enjoyed your weekend, but even if you didn't, or even if you missed out, that is okay. We have good, useful information in today's video that should help make this week a good one. And it really should be a good one because there are going to be some solid opportunities considering the stock market made history last week by setting a new record for the quickest ever return to all-time highs. One of the most popular stocks in the entire market, Palantir, fell by 9% on Friday, which will be nuts this week. And there are a handful of other events that should definitely bring in some strong moves. So stick with us today, and we're not going to waste any time either. So let's jump right in. Looking at the chart of SPY right now, we can see we broke the previous all-time high of $613.23 in pre-market on Friday. Like we pointed out recently, we've been seeing a ton of gains actually come in pre-market and after hours over this past week, and this is actually a really good thing because, as we know, the main people who are trading during this time are institutions. And while retail traders happily bought the dip from when the market tanked in April, institutions mostly stayed on the sidelines. And what we are starting to see now is all of these institutions run into the market at a rapid pace because they realize that they are offsides. And this has actually been proven. As we can see, according to Bank of America data, we are actually seeing the most rapid and largest net buying on tech stocks from their institutional clients in terms of all of the data that they've actually ever recorded. And that's great to see. And what's even more exciting, and I really couldn't even believe this next part when I saw it, but the recovery that we are seeing now is the fastest recovery the stock market has literally ever seen. Basically, 2020 was a crazy time in the stock market, and it was one of the most explosive recoveries that most people have ever felt. But even with that drop, it took 125 days for the S&P 500 to reach a new all-time high. Also, in 1998, which was the previous quickest return to all-time highs, it took 90 days for the recovery to happen. This current time around, we actually set a new record by recovering in only 89 trading days. So basically what we're seeing here is very exciting in multiple different ways. But what does this actually mean? Is it too late to buy in? Or is this the mother of all buying signals? Looking at some data here, we could see in environments where the S&P 500 has a significant correction, like we saw this year, but then it returns to a new one-year high within 3 months, it generally tends to be a bullish sign. Basically, we can see, especially once you get to like that 2 months later mark, not only is the market positive in a majority of situations, from 86% of the time to 100% of the time, depending on how far out you look, but the returns are also very positive, which is great to see. On top of that, when we just look at the visual towards the top half of this graphic, we can see when we have seen instances like this in the past, the market generally tends to do pretty well after the fact. But one thing that definitely stood out to me is that out of all of these instances, there have only been 2 where it was actually forming a new all-time high, because what this data is showing is when we see a new one-year high after a significant drop within 3 months, when we specifically look when the market made a new all-time high, that would be specifically looking at the data from 1982 and 1998. If we look at these two instances statistics, we can see that these are among the strongest performances that the stock market has had within this data set. We could see in 1982 and 1998, the stock market just crushed it. You know, I guess you could say the only exception would be 1 week later in 1998. But besides that, the stock market has done exceptionally well in environments like we are in now. So that's great to see. But also when we look at situations where we're not just looking at the environment we're in, but we also look at like the seasonality or like the time component of it, we could see that historically speaking, this time of the year is pretty strong. July has actually been the best month in post-election years and over the past 20 years, which of course is great. And then another thing that I really like, especially considering it's recent data, is we can see if we look at the green column on this chart, July technically wasn't the best month over the past 10 years. Technically, November has that, but the performance of July over the past 10 years was even better than its performance over the past 20 years and in election years. So like July has been like extremely, extremely good, which is great to see. And I would say it is among the best months of the year for the stock market, as we can see through this data. And I really like how the data here breaks down the returns into like different time segments, because you can really like see how the performance has been month by month in terms of like recent data, because the market's always changing. So like I especially really like to see the good outperformance over the past 10 years. So that's definitely good. But even some other information as we look more closely at the market right now, if we go to an intraday chart on SPY, like I said, that previous all-time high was at that $613.23 area. We could see on Friday, we got just under like the 616.50 area. So looking at the market for tomorrow, of course, that will be a resistance level that you will want to be conscious of, but there was even a little bit of resistance right around like 615.50, so just be aware of that. As we've been showing over the past few days, these SPY levels have been pretty influential in looking at points of like potential price change. So really, besides like 615.50 and like 616.50, those are like the only two like areas of like potential resistance overhead. Besides that, the skies are clear. We are at all-time highs. And then looking at some downside levels, definitely keep a close eye on like 612 and 611. These are the two most influential levels. We could see 612, especially on Thursday, was a point of key resistance, among other points in the past. And then 611 was the low from the drop we saw on Friday during the middle of the day. Besides that, we are still very close to all-time highs. And one thing that I really loved from the price action on Friday is that we saw a great, quick recovery after the drop in the middle of the day. What this is essentially showing is that there are a lot of people out there who are wanting to buy in, and the amount of people out there who are wanting to buy in certainly outnumber and are much more aggressive than those who are looking to sell, given when the market started selling off, not only did the stock market hold up, but we actually saw like a nice, strong, consistent, like clear recovery all the way into close, which of course is great to see. But talking more about like why we even saw this drop in the middle of the day on Friday is also important, and is something that we definitely have to talk about. So basically on Friday, we had some Trump news, surprise, surprise, where Trump basically said that he is ending all U.S. trade talks with Canada over the digital services tax that they are putting on the U.S. Trump basically said that we're going to let Canada know the tariff that they'll be paying to do business in the United States within the next 7 days. And when that came out, it definitely brought in a little bit of fear, but clearly the market didn't really mind too much given how strongly it recovered. But this will be important over these next few days because, like we just saw, Trump is going to be imposing a new tariff on what Canada is going to have to pay. And while it didn't crash the market, it certainly did move it. So over these next few days, please keep this news in mind because we are going to see an update soon. And when that update happens, there's a fair chance that we will see a respectable move. So basically, just keep in the back of your mind, wait for it to come out, and then when we do start to see the market actually move off of it, there can be some pretty good like intraday opportunities. So just definitely keep that in the back of your mind. And another thing to keep in mind is that we actually do have a short week this week because of Independence Day. So the market will be fully closed on Friday, and it's going to close early at 1 p.m. Eastern time on Thursday. But some other things you'll want to look out for this week are how on Tuesday, we actually do have a little bit of a hidden Powell speech right at market open. Technically, he's going to be having a policy panel discussion at the European Central Bank Forum in Portugal. This shouldn't be like a giant market moving event, but of course, if Powell says anything out of line, it certainly can bring in some strong movement. And we do technically have some ISM manufacturing data and JOLTS job openings data on Tuesday, 30 minutes after open. But what will be most important is the jobs data that will release on Thursday, 1 hour before open. As we know, jobs data has been among some of the most important economic data that everyone is looking at, because as everyone is assessing the possibility of potential rate cuts going forward, we want to make sure that the economy is in good shape to do that. Of course, inflation data has been closely watched, but also the jobs market has been a key area that a lot of people are watching to see how soon we actually need to cut these rates. So definitely keep that in mind. That'll happen 1 hour before open on Thursday. And while there aren't any major earnings reports, there is a little bit more of an unscheduled big event this week. Basically, the 4th of July is the deadline that Trump set to pass his big, beautiful bill. And he's been so adamant on trying to get this completed. And basically over the weekend, there was a 51-49 Senate vote that basically passed the procedural step so this bill can formally be considered a bill, but it technically still needs to pass the Senate and the House. But long story short, it is crunch time for this bill. So keep a close eye on solar stocks like ticker symbol ENPH, which has been moving quite a bit recently, because basically we are going to see some big headlines related to this bill, and even other things that can potentially sprout from it as well. So this is a little bit of an unscheduled event, but I definitely wanted to make sure everyone was aware of it. But now that you're all caught up and aware of all the important information you need to know, let's get right into the fun stuff, which are some setups and predictions. A stock that is so close on watch right now is Palantir. There's no way you can't not watch this stock right now. It fell by a little bit over 9% on Friday, and it is one of the strongest moving stocks in the entire market and is among the most popular stocks that we've seen over the past few years. For those of you who've been following us for a while, as you guys already know, we were very early to this one, and we were very vocal and bullish about it in 2022 and early 2023. And while I still love the company for the long term, the situation has changed for the short term, and I definitely see a major risk of a pullback. Like I said, on Friday, it had a very rough day, and realistically, there wasn't any big news to go along with this. The closest relevant news with this one is how the Department of Defense requested a base budget of $848 billion for its 2026 fiscal year, which represents a small decrease over the previous budget when you account for inflation. But realistically, there wasn't any real news to go along with this move. And essentially what we're seeing is, as we know, Palantir is a stock that people have been following and making a lot of money off of over the past few years. And while it has been uptrending in a basically straight line for that time, we know that this pattern cannot just continue indefinitely. There has to be a point where it eventually does slow down and pull back, at least for a little bit. And what we are starting to see now is what appears to be that start to happen, and we're starting to see a lot of people kind of all rush to the exit all at once. When we look at the intraday price action, we can see that on Friday it had a weak open to start out, and it was basically weak all day long. But what I really don't like with this one is how right before close it continued to sell off in a major way. And what this is ultimately showing is there's a lot of money that wants to exit out of this stock quickly. And when we also look at the stock in a broader sense, it is up a significant amount. So that isn't that surprising. I would not be surprised to see Palantir get to the 115 to 110 area over the next few weeks. Again, it hurts to say this about Palantir because I really like them for the long term. But in the short term, it looks like they are repeating a similar pattern that they had in the middle of February of 2025, where they were just running at all-time highs. And then once it starts to fall, there's a lot of people that just rush to the exit all at once. And when it drops, it tends to be pretty violent. So again, Palantir is definitely on my bearish radar. And it's a stock that has been moving so strongly. So regardless, there should be a lot of like good action and momentum driven movement here. The more pressure this stock puts on its like recent lows, like you could say like 130 and even like closer to like that 126, 127 area, the more intense the selling will become as more people panic sell out and rush to the exit all at once. The more shorts that come in, the more over leveraged people get margin called, and so on. So either way, keep it close on watch. It is definitely on my bearish radar. Another stock that is definitely close on watch is Enphase, and it is to the upside. It pulled back a fair amount on Friday as it fell by 5%. As we saw recently, there was a $10 million big money trade with this one. And given the news of how the big beautiful bill is, kind of like in crunch time right now, one of the main reasons Enphase even had this major drop in the middle of June is because there were proposals for some solar credits to expire quicker than they were originally anticipated to. And considering we're going to see some major moves with this big beautiful bill, ideally this week, this stock is certainly in play. And especially considering we recently saw a trader put $10 million into call options on this one, and the stock popped up by 13% the next day and is still moving up in a, you could say, shorter term sense. It is definitely close on watch. So Enphase is definitely on my bullish radar. While it doesn't necessarily have to go up tomorrow, it's definitely like on the bullish radar in a multi-day to multi-week sense, and especially throughout the next year, considering these options actually expire on June 18th of 2026. So definitely keep this one close on watch as well. And then besides that, let's jump right into today's momentum plays. And with the first one, we have Boeing to the upside, and we are looking for a potential breakout past the 215 area. With the next one, we are looking at UNH, where we are looking for a potential breakout past the 310.50 area. And then with the last one, we are looking at Coinbase for a potential breakdown past the 346.50 area. These three stocks are on the radar for potential continuations if and only if they break through the levels listed. As always, these stocks are volatile, so you have to prioritize protecting yourself like with all other trades. Size reasonably, have stop losses, and don't hesitate to cut when it's time to. Holding and hoping is for gamblers, so trade smart, trade discipline. And then besides that, let's jump right into today's $806,000 big money trade, and we are looking at ticker symbol JPM, which is JP Morgan, America's biggest bank. And this is actually a put trade here where the trader bought the 290 strike put options that expire on September 19th of 2025. This is an $806,000 trade. These put options are already in the money. They have a fair amount of time to them. JP Morgan is at all-time highs, and it looks like the trader here is definitely a little bit concerned about the potential for a pullback with JP Morgan here. And honestly, I can't blame them one bit, considering JP Morgan has had a crazy recovery from $203 a share all the way up to just under $290 just over the course of a few months. And the broader economy right now definitely does have some risk to it, to say the least. So this trade definitely doesn't surprise me, and it also acts as a hedge in many different ways as well. Whereas if we do see a pullback, considering these put options are already in the money, it's a relatively high probability trade. So definitely keep it close on watch. Just make sure that if you do follow this one, remember that this trade has all the way out until September, so this wouldn't be like a day trade style setup. It would be something that is trading the broader trend at hand. But before we continue on, if you are new to the channel, definitely consider to subscribe so you can get our videos recommended to you more often. Basically, every single day we cover the most important news, information, chart setups, key charts and analysis and statistics that you never would have otherwise seen. We cover daily big money trades just like we did with JP Morgan today, and one of the really good ones from last week was with Enphase, where we covered a $10 million trade and it popped up by 13% the next day. We basically try to cover as much useful information in around like 20 to 25 minutes every single day. If the market's open, we have a video for it. So definitely consider subscribing so you can get our videos recommended to you more often. And we also want to give a giant shout out to today's member of the day, Stack and Racks in the Stocked Up trading floor, who crushed it last week, as he had over $2,300 in gains. And he also gave a major shout out to AMD and Tesla as well. So we'll shout out those two tickers. Huge shout out to Stack and Racks. Keep up the great work going forward. But I would have to say it was definitely a pretty solid week last week. There's a lot of people who did well. If you're into short-term trading, definitely make sure to check out that first link in the description and the comments down below. You can save quite a bit and get full access to our army of trading robots, daily big money trades. You can chat with Tom and myself all day long, join our weekly live events, and basically access everything you can need for short-term trading. So definitely check it out. Again, you can save quite a bit with coupon code Big Money, which you'll see in the comments down below. We are set for a very exciting week, guys. Thank you all so much for watching, and let's crush it in the market this week.